Hey there. Welcome to All Things Social Security. I'm Stephanie Joy. Whether you are a first-time viewer, an occasional viewer, a subscriber, or one of the three tiered benefactor members, I want to welcome you and let your video begin. Remember, if you haven't checked out the memberships, it might be something up your alley because it gives you an opportunity for a little more Social Security disability attorney attention if you need it, but don't have representation and don't want to do a full-fledged consultation. Okay, have a great one, guys. Stay tuned. Good morning. Merry Christmas and Happy New Year, both of which are coming up in mere days. But it is a public service announcement, therefore, that it is the time this week and this coming week. If you are a self-employed person and you are disabled and working, or you are trying to grow your quarterly earnings credits from Social Security in order to be eligible to file for Social Security disability, if you had a more sporadic work history previously and found that your date last insured was in the past, but you are significantly medically impaired from working full time and you want to get those credits back so you can file. In the first instance, if you're working while disabled, um, so you have a pending claim or you're actually on Social Security disability, when you're self-employed, the money that is counted is your net earnings from self-employment, not your revenue, not the gross amount that you pull in, because the expenses, the legitimate expenses, and the IRS, provides information on what's legitimate. There's a lot of legitimate things that one can write off. I don't know that one has to. Um, so for the working while disabled folks, if you're not interested and don't need to get earnings credits because you already established your disability, or you already know that your DLI, if you have a pending case, is still in the future, then your biggest goal is keeping your NESE, net earnings from self-employment, under SGA. So a lot of those expenses for business are deductible by the month against the income brought in, but other ones, particularly in self-employed business, when money kind of comes in, like you could be doing work on something and you don't get paid till the third month when the person finally pays you, if it's a client or whatever, customer. Um, it really depends on the nature of your work, but now's the time if you need to bring down that to accurately bring down that earnings after you deduct expenses so that it is under SGA, because over SGA, you could be losing disability. It could be ceased. Um, you have until the end of the year to make those business expenses. Let's say your computer's on the blink and that's where you do all your bookkeeping and maybe you have a website or whatever. Maybe you need a new computer. If you drive at all for your business, whether you drive to the post office when you have to mail things, or UPS, or you have to get supplies, or you go visit clients, or you take somebody out to lunch over business, and it could be a meal expense, which I forget if it's like 50% off or whatever. But those are the things that if you don't already have them expended, and of course you want to find the receipts or your credit card or whatever, wherever you put them on, or your debit card. Now's the time to make those, you're running out of time to make those expenses, to go buy those things. I know I have a few things that I need to get for my business, including a couple new monitors. I need them to be able to be moved differently. But I think I need a new computer for another new hire, so that's kind of exciting. But so I do have to run out to Best Buy probably. But uh, now's the time if you want to be able to write those off for this year's business expenses. So you need to know what your revenues are and what business expenses you've already are going to be able to write off. So well, gee, I really need to spend another $500 or $2,000 or if I. to you know, bring that amount down if that's what it's going to take. All right. Just a reminder. How we time our purchases for our businesses is really important. If you are not working while disabled or a pending claim, but you're trying to earn your credits because you have an expired date last insured, and I have a video on date last insured. If you don't know what it means, because it's what is the difference between you being able to apply for Social Security disability and you not being able to. That's when you need to have earned enough to buy one, two, three, or four. I shouldn't say buy, pay for through your taxes, one, two, three, or four credits. For credits, 1730 times four, whatever that math is, would get you four credits. So you do not want to necessarily write off every possible thing you could. I don't think if it's going to bring you below the four credits if you needed four credits. Now, I like to think everyone can get four credits. You might say, well, I'll be insured if I get two more. Yeah, but you might only be insured for another 6 months with those two more. It depends where all your credits fall of, which quarters and which years in the last 5 or 10 years. So, I mean, I like to think, four credits is the safest way to go. Um, every case is obviously different though, so you have to really know what you're doing when you look at yours. But, you can earn well under SGA, but still earn enough to get those credits. And that will give you the opportunity for filing for SSD, or it could be you're filing now, but your DLI is about to expire because you haven't been earning credits and paying those taxes. And if you bumped up the earnings a little bit more, earned a little bit more, that's taxable, you can extend out that DLI that's about to expire. Once you win your SSD case, you don't have to do that because it's not going to expire on you. The whole thing changes because now you're on disability. But for everybody else, it's end of the year. You got to pay attention to this. All right. And we might have another video. I usually tend to do them in the early part of the year when we're doing our taxes, reminding people of, all the various things that you can, as per the IRS, write off that are pertinent to so many of the different um, uh, self-employment businesses people have. It's more difficult if you're a W-2 because you can't write off self-employment businesses because you're not self-employed. So that's a whole nother thing. With its W-2, it's easier in many ways. Just keep your hours low so your income never goes above what you need it to be. But self-employed is, it's a whole different wild, crazy rodeo out there. All right. But this is the week, guys. If you need to make some expenses, if you have to get them for business anyway, maybe, and look at your numbers, you got to do this in advance, right? Maybe this is the week you got to do it. You won't be writing them off for 2025. You'll be writing them off for 2024 and bringing that NESE, net earnings from self-employment, down below SGA if that's what you're flirting with. Okay? All right, guys. Merry Christmas.